Welcome back to Quantreef.com. Bitcoin's trading around 64,060 right now, sitting almost right on top of its session VWAP, which makes this a genuinely interesting spot. Today we'll walk through liquidity, support and resistance, VWAP, Fibonacci, fair value gaps, positioning, and where price likely goes over the next several hours. Price is at 64,060 and the broader regime reads neutral, not clearly bullish or bearish. Price is hovering just under the anchored VWAP from the swing low at 64,111 and just above the anchored high VWAP at 64,037, so those two are basically sandwiching price right now. It's also sitting above session VWAP at 63,797, which is a mild sign of acceptance above value, but the tightness of these VWAPs tells you neither side has real control yet. The liquidation data isn't printing clean pool levels for us right now, but we can lean on the order flow and structure side instead. What we do know is stop hunt risk is flagged high on this chart, meaning price is prone to running through resting stops before it commits to a direction. That's consistent with a market sitting between VWAPs with no clear liquidity magnet yet pulling it decisively one way. On the panel right now, resistance is stacked above the stop-loss level at 64,210, then Fib 0.5 at 64,589, then target 1 at 65,567, target 2 at 66,938, and target 3 way up at 68,216. There's nothing printing on the support side below, which itself tells you this setup is really about testing that stack of resistance first. The stop-loss level right above current price is the one that would invalidate the bullish read if it gives way. Above price, the nearest fair value gap is the 4-hour bearish one between 64,354 and 64,959, only about 1% away, so that's the nearest magnet. Below, there's a 4-hour bullish gap from 62,863 to 63,664, already half filled. On the Fibonacci side, price sits inside the retracement, right near the 0.382 level at 64,188. Given how close that nearby bearish gap sits above, price is more likely to react to that fair value gap first before any fib extension talk becomes relevant. The grade here reads watch, neutral regime, with N at 79 and HTS at 59 as printed. Trend and structure and order flow layers are carrying the score, while statistical volatility and institutional positioning are dragging it down. Retail and top account long percentages aren't printing, but the 4-hour taker split shows just 42% long volume against 58% short, meaning short sellers have been more aggressive on the tape, roughly 3.2 billion in short volume versus 2.3 billion long. With resistance stacked directly overhead and stop hunt risk flagged high, price likely probes toward that stop-loss cluster near 64,210 and the Fib 0.5 at 64,589 first. If buyers push through, the 4-hour bear fair value gap up near 64,959 becomes the next rail magnet, and a clean break above that opens the path toward target 1 at 65,567. If sellers defend that zone instead, the aggressive short taker flow suggests continuation lower toward the bullish gap near 62,863 to 63,664, where the long setup targets 63,175 and above. Bullish case confirms on acceptance above 64,589, invalidated back below 64,210. Bearish case confirms on rejection there, invalidated if price reclaims and holds above 65,567. So we're sitting right at a decision point, and whichever side takes the next pool of liquidity probably defines the next rail move. If this kind of breakdown helps, drop a like and subscribe. Quantreef.com runs this same 9-layer grade, probability and liquidity read across more than 100 coins, and there's a 7-day trial if you want to dig deeper. As always, this is for educational purposes only and isn't financial advice.